Okay, I think we can cancel that and I'll just move on, I think. Good morning, everyone. It's good to see everyone here so early. Before I take you through our story, which I think is an extremely exciting story, I'm going to tell you a little bit of why I'm here, why I joined Mawson West some 15 months ago. I have a simple philosophy with mining. It starts with good assets and good people, and if you've got those, you've got a real opportunity to be successful. And that's in summary what I saw here when I had a look at this project, and in particular Dikalushi, when I had a look at this ore body, which is a very high grade ore body. It's been the success of another company before us. But I came out of gold, and I had to sort of put this into some sense that a gold guy, a gold mining engineer could understand. So I converted the grade, the copper grade and the silver grade to gold grams per tonne, so I could get a handle on the value. It back calculates at about 15 grams a tonne in gold, so it's a pretty high value project. I'm now a copper guy, so I talk in copper terms and I convert the silver to copper. And the Dikalushi ore body is about 7 to 8% copper equivalent. So it is an exciting project. The second part I saw about it was the infrastructure. We border our project and our tenements border. They border the Lake Muro, which you can see just here. You've got Kapulu up the top, Dikalushi in the middle, and we've got Lufukwe in the south. We've got two ports, Kilwa and Pweto, on the lake, and we've got a bonded warehouse in Zambia. The red line through the middle being the border between Zambia and the DRC. So where do we sit in the DRC? Well, we sit in the Katanga province, just north of the Copper Belt, and of course the advantage in that is that we're not caught up in all the border crossing issues when you're exporting and importing into the DRC. So we ship straight across on our barges straight to the market where our offtake partner takes the product at that point. So what are we? We're a bit of an odd company. We're an Australian company. We're listed on the TSX and we're operating in the DRC. We produce copper and silver. We've got two projects in the DRC, one producing, which is Dikalushi, which finished an open pit process last year, and we commenced underground mining last year as well. So we ramped that up this year, and we've got the Kapulu project in the north of our tenements, which is under construction as we speak. We've got a large tenement package, 7,300 square kilometres. We are actively exploring, although the last year and this year has been focused more widely on our resource definition drilling. Excellent transport and infrastructure. We can produce a tonne of copper concentrate at Dikalushi. Within 2 hours we can have that at our port, and within 2 hours it's at the market where we get paid in Zambia. We're in a great spot. Just a little bit about the company. 170 odd million shares, market cap of 90 million. We're fortunate enough to have $48 million in the bank, and we didn't raise that. We actually produced that. We came from our mine. We're one of those lucky companies. Our debt is down to $7.5 million, and given that we started 2013 with $35 odd million debt, it was a good year for us. We went from virtually nothing in the bank in 2013 to having a $90 million turnaround in our business, paying off debt, having a very strong balance sheet, and also injecting some capital into our projects. We've spent a bit of time rebuilding the team over late 2012 and 2013, and I have to say that I haven't worked. Whoa. Good morning, everybody. So we've got a new team, and we're a little bit excited about what that team's going to bring this business in the coming year or two as we bed down this company and grow some value for our shareholders. Great share register, MMG from their holding in Anvil, Pack Road out of Sydney with 11%, JP Morgan and BlackRock with 10 and 8, RBC, Macquarie, and management also holding 5% of the company. It's funny, in my last company it took me 5 years to get a register like that, and I got one straight up here, so it was good work by predecessors. So what have we done this year? Well, last year was a transformational year for us. I've explained the finances, but we produced 21,000 tonnes of copper in concentrate, some 2 million, just short of 2 million ounces of silver. We met our first guidance. Our open pit stockpile, open pit is now completed, and our underground mining is ramping up as we speak. From a corporate perspective, and importantly, we've got a very healthy balance sheet, and our debt position is significantly better than what it was when I started late 2012. We've managed our capital in line with our cash generation, and we're just about to launch another capital offensive with the Capullo project, which I'll talk about in a minute. The opportunity for us is to extend mine life at Dikalushi. Dikalushi underground is very shallow. It's only 200 metres deep at this point, and the infrastructure is already down to that point. We've got resource upgrades that we've done this year, and we've got a lot of reserve and resource upgrades to come, both at Dikalushi, our satellites, and the Capullo project in 2014. I'm not going to get too focused on these slides. I guess the important graph that I like to see is your debt coming down and your cash going up. When you look at where the company's come from in its debt position and its cash generation, it's a testament to the group of people that are running this thing, and also the quality of the ore body. Again, I'm not going to focus much on this slide except to say that last year we mined 6.3% copper out of the Dikalushi ore body, and the silver grade was around about 190 grams a tonne, or if you like, 6 ounces of silver, 7 ounces of silver. The exciting part for us now is our underground. We went underground in late November. First ore December. We've got more ore coming out. We ramp up this year to about 8,000 tonnes of copper and just over 1 million ounces of silver. We expect that to grow next year. The exciting thing about this ore body is it's open at depth, and we'll have some significant improvements in both the resource and the reserve over the 2014 year. I think interestingly, the ore body being open at depth, and these are 200 metre increments, we have a lot of opportunity in converting a lot of these resources into higher confidence categories, but also converting into reserves. So we sort of aspire internally to push this underground beyond 5 years, which gives us regionally an opportunity to work on our satellite opportunities. I draw you to one hole that we've got right down the bottom just before the ore body continues unknown, 22 metres at 12% copper and over 300 grams a tonne silver. It's a great ore body. Just having a quick look at our satellites. The important thing for Dikalushi is that we sit in the middle here. We've got a couple of ore bodies out here, Kazumbulla and Kabasanji. We'll have an upgraded resource on Kazumbulla and a maiden resource on Kabasanji this quarter, and of course reserves will follow that as well. And we've got a lot of targets sitting in this area within that sort of 25-kilometre radius of Dikalushi. Capullo. Capullo is a project at the north-eastern end of our tenement package, and for those that are thinking how close are we to Goma, we're about 700 kilometres from Goma and no road, so we like where we are there. This project has had some $77 million spent on it. We spent approximately 10 last year because we pulled the whole plan apart. We looked at the flow sheet, we looked at the plant, and we're going to come out with a feasibility which is going to show a lot higher throughput and a lot higher output than what the original feasibility study is. We will grow the current resource, the mine life, from the current 6 years towards 8 and 10 hopefully, and we're doing all that work as we speak. Just a couple of quick looks at how advanced the project is. All the civil works are complete now. ROM bin feeders, crushers are all installed, screen decks in. We're really just looking at flotation. We're looking at the float building and float cells to go in, the electrical and the piping and a tails dam. So we're very well advanced. We've done a lot of work on our resources this year. Spent some $7 million on just upgrading our resources. The original feasibility was only about Shaba. The guys have now got Safari north and south, which is equidistant from the plant and on the same fault line. We've now got a resource which is now not purely in the indicated category, but we've now got the majority of our measured and indicated in the measured category. When we're talking about the Shaba ore body, which was the ore body which the original feasibility study was done on, we've now got over 70% of that in the measured category. So we've moved a long way, and we feel very confident about these fantastic ore bodies. And when I talk about fantastic ore bodies, these ore bodies are sort of 10 to 25 metres thick and consistently thick, easy to mine. I won't take you through them individually. Just a quick look at our exploration. We've got the satellite deposits, and we're focusing on the Dikalushi region this year. We did Capullo last year. Dikalushi will be our focus, both the Dikalushi ore body and its resource, and the satellite opportunities and the other regional opportunities that we've already targeted. At Capullo, we'll be looking at targets further along strike and up strike, although we're confident that we've bedded down a decent mine life there at this point. And we'll continue to do some work in the southwest of our tenement package around Lufukwi. Be careful how you say that one. Lufukwi is something that's really interesting. It's a big anticline right down the southern end. It's something that will stand alone. It needs a lot of drilling still. We don't totally understand it. It's something to be, we think is going to be a large, potentially a large, 1.5% copper with fairly high silver credits attached to it, but it's not our main focus right now. Just a quick look at our corporate responsibility, and it's something that we do take very seriously. I can tell you that most CEOs and management teams are always trying to push the boards. We never have to push our board much on our social responsibility. We're in a position now where we're injecting a lot of time, effort and money into this business. This is a well-structured company in terms of 90% of it's owned by shareholders and 10% is held by a community foundation, which is headed up by a lot of community people, and we're about trying to get some sustainable development, sustainable enterprises into the regions around our mines, and we're having some great success with that project. And one of the ones that I really enjoy talking about is, we don't buy uniforms at our mine sites. We make them, and we make them by teaching a lot of the local ladies how to sew. They can then take that skill back out with the pedal machines back out into their communities. Instead of buying clothes out of Zambia, they're actually making them and forming businesses, and that's the kind of stuff we like to see happen inside our community development. This is about as busy as you get, but what it means is that we're really busy. We're doing a lot. We've done a lot. We've got a lot of hard work in front of us. We well and truly know that. We, in summary, we've got a great ground position in the DRC. We've got some really good assets. We've got a fantastic team, and I'm really excited about the value that that team can add to these assets, and of course ultimately to our shareholders and the communities that we have around our operations. We're at stand 303, which is right down the other end now, the main hall. Please call in. We've got our team there, and we're happy to take you through what we think is a really exciting company with some really exciting prospects to grow some significant value for all stakeholders in the coming 12 to 18 months. Thank you very much.